Every real estate guru on YouTube says the same thing. You don't need money to invest in real estate. And then they try to sell you a $900 course. I'm not selling a course. I'm learning this stuff right alongside you. So today, I'm going to walk through 5 real strategies for investing in real estate with little or no money, and then I'm going to tell you which ones are borderline scams, which ones actually work, and which one I'd try first if I were starting today with empty pockets. Let's go. So before we get into strategies, let's be honest about something. No money down doesn't mean no money. It means none of your money. The money still has to come from somewhere: a lender, a partner, a seller, a bank. If anyone tells you that money just isn't part of the equation, they're lying to you. The question is never, can I invest without money? It's, whose money am I using and what does it cost me? That distinction matters. A lot. Okay, strategy number 1, wholesaling. Wholesaling is the one you've probably heard about the most because it's the one the gurus push hardest. Here's how it works in theory. You find a property, usually a distressed one, someone who needs to sell fast. You get it under contract at a price below market value. Then you assign that contract to an actual investor for a fee. You never buy the property. You never own it. You just connect a seller to a buyer and take a cut. Sounds clean? In practice, wholesaling is hard. You're essentially doing the work of a real estate agent without a license, which in some states is illegal. You need to find motivated sellers, which means cold calling, door knocking, or sending hundreds of letters. Most people who try wholesaling quit within 6 months because they never find a deal. But, and this is a real but, it genuinely requires almost no money to start. Your cost is marketing, which can be as low as a few $100. So if you have time and hustle but no capital, wholesaling is the most accessible entry point. Just know what you're signing up for. Strategy number 2, house hacking. This one is my personal favorite, and I'll tell you why in a minute. House hacking means you buy a property, usually a 2 to 4 unit building, live in one unit, and rent out the others. Your tenant's rent covers your mortgage. You build equity. You learn what it's like to be a landlord on a small, manageable scale. Here's the money part. If you buy an owner-occupied property, you can get an FHA loan with as little as 3.5% down. On a $300,000 duplex, that's about $10,500. Not zero, but a lot less than the 20% most investors need. And here's the part that makes it real. If you live in one unit and rent the other two, the rental income can often qualify you for the loan. So the bank isn't just looking at your salary, they're looking at the property's income potential. That changes everything for people who don't have a high income but want in. This is the strategy I'd try first. It's legal, it's straightforward, it builds real equity, and you actually learn how to manage property, which is a skill you'll need for every other strategy on this list. Strategy number 3, seller financing. In a seller finance deal, the seller acts as the bank. Instead of you getting a mortgage from Wells Fargo, you make payments directly to the person selling the property. You agree on a price, an interest rate, and a payment schedule. No bank involved. This can work with very little money down, sometimes zero, because the seller sets the terms. Why would a seller do this? Usually because they own the property free and clear. They want monthly income instead of a lump sum, and they're motivated to sell. You find these sellers by looking for properties owned outright, often older owners who've had the property for decades. The risk: if you stop paying, you lose the property and everything you've put into it. And seller-financed deals can have balloon payments, a big lump sum due after a few years. If you can't refinance by then, you're in trouble. Strategy number 4, partnerships. This is exactly what it sounds like. You find someone who has money but no time or interest in doing the work. You do the work, finding the deal, managing the property, handling tenants, and they provide the capital. You split ownership. This is one of the most common ways people get into real estate without their own money. The challenge is that partnerships are relationships. You need a clear, written agreement about who does what, how decisions get made, and what happens when things go wrong. Because things will go wrong. A water heater will die. A tenant will stop paying. And now you and your partner need to agree on how to handle it. But if you find the right partner and structure the deal well, this can be one of the most powerful strategies on this list. You bring sweat equity, they bring capital, everyone wins. Strategy number 5, the BRRRR method. BRRRR stands for buy, rehab, rent, refinance, repeat. So it's You buy a distressed property, usually with a short-term loan or hard money. You fix it up, you rent it out. Then you refinance it with a long-term mortgage based on the new, higher value. The refinance pays off the short-term loan and ideally pulls all your money back out. Then you do it again. In theory, BRRRR lets you recycle your capital infinitely. In practice, it's the most advanced strategy on this list. You need to buy the property cheap enough that the renovated value supports a full refinance. That's harder than it sounds. You need to manage a renovation, which means dealing with contractors. And if you've never done that, it's an education in itself. And if the appraisal comes in low, you're stuck with your money trapped in the property. BRRRR is not a beginner strategy. I'm including it because you'll hear about it everywhere, and I want you to understand what it actually is, not just the highlight reel version. Okay, so those are 5 real strategies. Now let's talk about what's a scam. Number 1, anyone who tells you real estate investing requires no money and no effort and no risk. That person is selling you something. Every strategy on this list requires at least one of those 3: money, effort, or risk, usually all 3. Number 2, lease option scams. Someone offers to let you rent to own a property, collects an upfront option fee, and the contract is structured so you can never actually exercise the option. They keep the fee, you get nothing. These exist. Be careful. Number 3, subject to deals done recklessly. Subject to means you take over someone's mortgage payments without formally assuming the loan. It's legal, but it's risky. If the lender finds out, they can call the loan due immediately. Some gurus teach this as a zero-down strategy without explaining that risk. If you ever hear just take over payments, ask a lot of questions. So, if I were starting today with no money, what would I do? House hacking. Every time. It's the lowest risk, the most beginner-friendly, and it teaches you the fundamentals of being a landlord without needing to be a deal-finding machine. You need a down payment, but a small one, and the rental income helps you qualify. It's real. It works. And it's how a lot of actual non-guru real estate investors got started. If house hacking isn't an option, maybe you can't qualify for a loan or there aren't any multifamily properties in your area, then partnerships. Find someone with money